Hi, everyone, and welcome to the Market Week in Review for the week ending June 25th, 2021. I'm Julie Zhang, and I'm joined today by our Director of Investment Strategies, Shay Shatria. Hi, Shay. It's wonderful to see you.
Hi, Julie. Great to see you.
It's my first time back after maternity leave, so it's great to be back and also back in the office to get a sense of normalcy. So on today's call, we're going to cover three topics. The Chairman Powell's comments to the House Select Committee, an update on the U.S. housing market, always popular, and thirdly, the Purchasing Managers Index for June. So let's start with Chairman Powell's comments, who was on Capitol Hill this week, testifying to the House Select Subcommittee on the coronavirus crisis, providing an update assessment on the economy and its outlook. Was there any new information, Shay, from his remarks or Q&A related to the Fed policy, considering that only last week the FOMC had a meeting and released some notes?
Chairman Powell, it did seem like he was walking back some of the rhetoric from last week, softening, trying to soften the blow at least from last week's rate setting meeting. And what was interesting was in sort of that Q&A exchange that was taking place with Chairman Powell, one of the questions came up with regards to rate hikes, and the chairman responded by saying something along the lines of, that he strongly believes that the recent spike in inflation will only be temporary and shouldn't cause the Fed to raise interest rates, too quickly. So I think, that kind of captures where at least the chairman's mindset is at, and that the Fed is willing to still be very patient, despite the upgraded outlook to growth and inflation. And if we kind of just assess the market action this week, and as we're recording here late in the trading day on Thursday, what we can see is that both the S&P 500 and the Nasdaq are trading basically intraday record highs. So the markets have clearly kind of looked through a lot of the volatility, and I think are being comforted by the fact that the Fed may indeed exercise some patience and importantly offer plenty of advance notice prior to any policy changes. And I think the final point that's worth reiterating here is that we have to keep in mind that it is a two-step process. The first step is tapering or slowing down the pace of QE or the pace of asset purchases. So, that is in a sense a precondition to rate increases. So what we're paying close attention to right now is, of course, the Fed's communication around its QE, its asset purchase program, and specifically the timeline for tapering.
So back for another week, a popular topic, of course, is still the U.S. housing market, hot and strong. So it's been pretty strong for a while. I know that in my neighborhood in Seattle, the housing prices have gone up 25% over the last year. So what's the latest data telling us, and what's going on with housing prices in general?
Yeah, housing's been sort of an interesting phenomenon because, I mean, we'll be talking about the US, but it's almost globally in many regions across the world. We've seen the housing market really pick up during the pandemic, as odd as that may sound. And specific to the U.S., to your point, Julie, it's been a pretty sizzling housing market in the U.S. as well. But what we have noticed, and we got a couple of data points this week on the housing market, and what we can gauge right now is that there is some softening, at least in housing market activity from a sales perspective. So for the month of May, we did get new home sales as well as existing home sales. And for existing home sales, they were down about 0.9% on a month over month basis. While new home sales were lower by about 5.9%, again, on a month over month basis in May. So what we're seeing is economic activity actually slowed, sales activity, sorry, not economic, but sales, housing market sales activity slowed down a bit over the last couple of months. But I think it's worth pointing out that the recent weakness that we're seeing or softening in the housing activity is not a reflection of the U.S. economy, which we continue to believe is performing quite well and is on solid fundamentals. So what we have seen, perhaps that's influencing the housing market and housing fundamentals, are a couple of things. Perhaps one is home prices themselves, and you kind of touched on it. If you look at home prices, they've been accelerating at a pretty healthy clip over the last 1 year. And if you think about, that first-time home buyer, that new entrant into the housing market, these are pretty sizable gains. So that obviously is probably slowing down some housing market activity. The other thing we have to keep in mind is because of the demand surge that we've seen as households have been looking for, you know, bigger homes and more workspaces and what have you, and the demand as a result of that, inventories are pretty lean, and that's right now weighing on the sales activity in the housing markets.
Well, I think all my fellow millennials looking for housing out there is going to be looking forward to further softening in the market and being able to enter into first purchase buyers for sure. Thank you so much for that update. And our final topic for today, the Flash Purchasing Managers Index, also known as PMIs, for June has been released for several key regions, including the US, the UK, the Eurozone, Australia, and Japan. What are these surveys telling us about the pace of economic activity around the globe?
What's interesting is, with perhaps the exception of Japan, which we'll touch on, overall, what the PMIs are suggesting, to give you the punchline right at the gate, is that the economic data and the global economic recovery is in decent shape and is firmly intact. Now, if we were to kind of quickly go through some of the regions and starting with the Eurozone, I think that was an interesting report because IHS Markit, they actually indicated that the Eurozone economic activity is actually growing at the fastest pace in 15 years. The composite PMI increased to 59.2.
Wow.
And that's a pretty healthy level. Now, the way we kind of read the PMIs is any number above 50 uh, denotes that economic activity, business activity is expanding, and if that reading is above 60, that's a pretty exceptional pace of expansion. So at 59.2, the Eurozone economic activity looks to be on a pretty firm footing going forward. So if we switch then to the UK and Australia, the flash PMI is there, did dip slightly, but they remain at pretty elevated levels. So for Australia, the PMI came in at 56.1, and for the UK at 61.7. Again, UK above 60 is pretty strong. Coming then to the the US situation was in a sense similar to what we saw in UK and Australia, where the composite PMI did tick down slightly. But even still, it remains at a pretty healthy level at 63.9. So again, anything above 60 is a pretty strong and healthy level of economic expansion. The exception, as I said, sort of at the get-go, is Japan. The PMI did decline to 47.8, and it is below 50, right? So it is in that contraction territory. But even here, I think there was a bright spot that IHS kind of pointed out in their write-up, and which was that businesses in Japan are optimistic or becoming more optimistic about the accelerating pace of vaccination, and therefore the outlook for the economy at large. So I think over the next several months we should start to see the PMIs perhaps improve more meaningfully and get above 50 in Japan also.
Thank you, Shay. It sounds like a lot of bright spots throughout this conversation. So it's nice to come into my first market week in review back with some optimism in the air. And thank you so much for sharing your insights. And thank you all for joining us. And we hope to see you next time.
Hi, I'm Eric Risteman, Chief Investment Strategist for Russell Investments. If you like what you saw in this video and want to see more like it, please subscribe to our YouTube channel.